Good afternoon, everyone. This is Joe Bacella here at Chaiken Analytics, and I'd like to welcome you to our presentation of Investing 101, Finding Winning Stocks in 5 Simple Steps. Our presenter today is Sandy Chaikin, co-founder of Chaiken Analytics. Throughout our presentation, please be sure to submit your questions using the Zoom Q&A window, which is available in the upper left-hand corner of your screen. We will be available throughout the presentation to respond to your questions. As a reminder, this webinar is being recorded and a copy will be sent to everyone who is registered. Now, throughout our presentation, please be sure to follow along with our presentation using Sandy's Investor Workbook. A link to this workbook is currently available in the chat room window. Now, with no prior experience, Sandy Chaikin started investing in 2012 with Chaiken Analytics and built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy presents at NASDAQ and industry conferences on fearless investing. Now, to get us started, here's Sandy Chaikin.
All right. Thank you, fellows. Thank you, Joe. Thank you, Chris. Okay, sorry about that. Just had a little glitch there getting it to full screen. So, welcome everybody. As Joe said, I started investing in 2012 with Chaiken Analytics, and since then I've been able to outperform the market each and every year. And since, as the title, let me flip back to the title here, as the title indicates, I have been outperforming not only the S&P 500, but most money managers since I started investing. So those are the little secrets that I'm going to be sharing with you, because the research shows that 80% of the pros underperform the S&P 500. Thus, by correlation, I'm not only beating the S&P, but beating the pros as well. So today's webinar is going to take you through those secrets of how I do this. And with the workbook, you can have a takeaway that you can also utilize and take notes on as we go along. All right, so the S&P has grown an average of almost 10% over the past 20 years, which is pretty good. However, individual investors have only averaged 2.5%. And reason being is that individuals have emotions. I mean, we're all people and humans, and thus come with emotions, and it's hard to get those emotions out of the decision-making process when you're investing your money. So the trick is, how do we do this? These are the 5 steps we're going to be going over. Most individuals invest in mutual funds, and the research also shows that not only have the advisors been underperforming the S&P, but 80% of actively managed mutual funds have been also underperforming the S&P, and you've got fees that are built in there that add on to the pain. So not only are you underperforming, but you're paying money for that. The solution, in our opinion, is to go with bullish rated stocks. And these are stocks that outperform. And as you can see from the 5 stock examples here, these have all been outperforming the market clearly since the beginning of the year. And these are 5 of the stocks that I own now. I typically own, it's gotten to be more like 12 or 14 as my portfolio has grown. So I have 12 or 14 stocks at any given time. These happen to be 5 of the ones that I currently own. But these are the type of stocks you're going to be wanting to invest in yourself, right? I mean, you'd rather have a stock like Apollo or Lam Research that's in the 70% performance range, as opposed to the S&P, which is pretty good this year. It's up 21%. If you had just put your money in an S&P 500 account, it would be up 21%, which is darn good. But you can do even better. So if you want to do better, then you want to invest in bullish rated stocks. So my promise over the next hour is that you're going to discover my secret to beating the pros by finding winning stocks and finding them quickly and easily. I tend to spend 15 minutes a day on my portfolio, so this doesn't have to be an all-day adventure. All right, so here's a typical bullish stock that I'm going to be walking you through today. This is Cigna, and I'm just wanting to give you like a sneak peek at the type of stock we're going to be covering. You can see on the bottom, all these Chaiken indicators are green. The stock is moving nicely at a steady pace. I bought a second position on this stock here in this fall, having bought my first position off this chart back in November of last year. But I'm going to walk you through how I know when to buy a stock and most importantly, when to sell. And all of this is so that we can make money in the market, right? I mean, the way I was grown up, it was not considered polite conversation for women to talk about money. So that seems kind of strange now, but that was the way it was when I was growing up. So to be admitting, as I am right now, that I'm investing in the stock market so that I can make more money goes against everything I learned, but it is the reality of where we are today. And the whole point of investing is to make money. So I'm not shy about that anymore. And I love it, actually. And the money that I make, we basically invest in a number of trips that Mark and I have taken. So we've been to Rome, we've been to Turkey, we've been to Vail, Colorado. We're going to Florence in Italy in May. And this is in addition to putting away certainly much of the profits into my 401k plan so that it's there for retirement. But we need to celebrate our lives along the way, and it's okay to spend some of this money on things that we enjoy. So, you know, what do you enjoy? And do you want to make this money so that you can take some trips, or, you know, pay off an education bill, or pay for an education bill, or buy a new car? I mean, think about what that is, because that puts a goal in mind, and then you're working towards that goal. It makes it more fun. So why should you listen to me in the next hour or so? Well, as I've already said, I beat the S&P 500 and thus 4 out of 5 pros. I started investing in 2012 in stocks that I had heard of, like eBay, Yahoo, you know, Southwest Air, Skyworks, which provides chips for the iPhone. And those did really great. And as I got more accomplished, I'd go into these smaller cap stocks. I call them the kind of the hidden treasures, which are stocks like Centa, Quad Graphics, NACO. These were up over 100% in 2016. And so this year, I'm in kind of a combination of small, mid, and large cap. Some of the examples you can see right there: Apollo 77%, Lam Research is up 75%, and Lincoln Financial is up 63%. So this is all spending 10 to 15 minutes a day on my portfolio, because like most of you, or many of you, I work full time. So time is a valuable commodity that I have very limited resource with. So we have to spend it very efficiently. So let me just take a quick step back and explain how I got into investing in the first place. And back in the 70s and 80s, when I worked for companies, Elizabeth Arden and L'Oreal in New York City, and then the Franklin Mint outside Philadelphia, I started investing with a 401k plan that was offered to me, and the choices were mutual funds. So I did get into some great mutual funds with Fidelity, the Magellan Fund, and Lake Mason's Value Trust, and those were great, and the portfolio was growing. And as it grew and my career became more demanding, I felt that I needed a professional to really oversee this, and that I was not educated to manage this type of money. So at the suggestion of a friend, I hired a wealth manager, and things went okay for a while. The first thing he did was sell the funds that I was in and put me in 8 or 10 funds of his own, which Mark, you know, since has told me that's kind of standard standard operating procedure. So, but that was okay for a while. But as we hit 2008, I don't have to remind anyone what happened. And as the market was starting to crash in that fall of 2008, I would call him. remember exactly where I was when I was making these calls, saying, boy, you know, sure, signs are all there for the market going down. Don't you think we should sell? The answer I always got was, no, it's okay. They'll all come back, and it's better just to hold the course, stay the course. And because I like the confidence to override his decision, feeling like, well, gee, he's the professional. He knows better than I do, right? I was wrong. But in 2009, once my portfolio had dropped by over 40%, I said, this is as much as I can do. I've got to just take control of this. So I took back control of the portfolio in the spring of 2009 and opened up a Vanguard account and put the money in there. But it was a pretty devastating experience. I'm sure many of you sadly can relate to this. If you can, maybe just put into your chat box, you know, can relate, or or you know, had the same experience, something like that. If you don't mind just typing that in. But it was pretty devastating, and I had worked, oh gosh, over 30 years to build this fund up. So to see 40% of it evaporate was really, well, it was devastating. So, but what it did was it made me resolve to do this myself and to find a way so that I could take control of my financial future. And this is the message that I want to impart to you all, is that it's really important that we all do that and take control, at least are part of the conversation. And I know it's very easy to turn it over to someone else, I mean, being a spouse or a wealth manager, and that's fine. But even if you do that, it's still critical that you stay involved and be part of the conversation and stay up on your finances, because as I say, nobody cares more about your money than you. And it's your money. You've worked really hard to earn it, and you deserve to have it well protected and grow. So that was kind of the silver lining of this experience, is that I came out of it thinking, not thinking, but really resolved that I was going to take control, and I did. And since the fund has more than threefold increase, so it's back where it should be now. But I know we're all, as individual investors, facing challenges every day when we look at a stock and can't decide whether we should hit that buy button or wait or pause. Or if we own a stock and we see it going down and we don't know whether to buy, you know, to sell it now or hold on to it. So if you don't mind, just Joe is going to put up a poll question here, and let's just get your feedback on what gives you pause. You know, what are the challenges you face? Joe, do you want them to check all that apply, or just one? I know we kind of mix it up sometimes.
This time I wanted to, it's been a little while since we've just done one, so I thought we'd change it up for today. But yeah, let us know. Give it a moment to read through. I know there's a lot of different options there, but let us know if there's perhaps one in particular that stands out among the rest.
Okay, great. Thank you.
Mm-hmm.
We'll give you a minute to fill that in.
Mm-hmm. And I see there's already a good chunk of people who've responded. Thanks in advance for that.
Great.
And I guess we'll give it about 10 more seconds. So I know there's a lot of options to read through, and maybe choosing just one of those, I know it can kind of be a tough decision. And let's see. I see there's still a few more trickling in, so I'm gonna wait until that is dried up. And it looks like we're there. All right, let's take a look. And it looks like there's one head and shoulders above the rest. Sandy?
Well, this is typical of what we usually see. So timing is number one. Looks like uncertainty and volatility is number two. And information overload, that's always a biggie. That's number 3. Lack of confidence, poor stock selection, lack of tools, lack of education. Yes. Okay, great. Well, the clear challenge for most of you then is the timing. When do you get in and when do you get out? And Joe would concur that that is the single most issue that he faces every day when he talks to our subscribers. Right, Joe? That's what you found as well.
Very often.
Okay, so guess what? I anticipated your replies because these are consistent with what we found on each of my other webinars. So this is what we're going to be addressing today. Timing, that's a biggie. When to buy and sell. We're going to help you with that. Fear of loss, trading on emotion. That's always a concern as well. We're going to help you with that. Information overload. I think that was the number 3 challenge today. How do you make sense of all this data that's we're constantly bombarded with? Emails, texts, 24-hour news cycles, hundreds of channels to listen to. It's not easy. So there's got to be a better way, right? The better way for me is to follow these 5 steps, and this is the discipline methodology that I've established and has worked for me. And I trust it'll work for you as well. So we're going to go through each of these steps one by one, all of which are going to be displayed on the Chaiken Analytics platform. We call this our financial freedom fast track. The platform is used by the pros. It's used, we are quoted frequently in the media, just to give you a little bit of substantiation that this isn't something we're just 2 of us in a garage doing. We've got an office in Philadelphia with 27 employees, and Mark is quoted frequently. He was in Forbes today and CNBC yesterday, and stories are written about us, about Chaiken Analytics in the media, particularly in the financial media. So the platform is based on a very simple but powerful model, which we call the Chaiken Power Gauge model. As you can see here, it looks like a gauge. It goes from very bullish to very bearish, very simply displayed. But underneath it, there's a lot more going on that meets the eye. What it does is it cuts through the clutter. It solves that information overload problem that so many of you said. It comes out in a simple rating, as you can see here on AMAT back in June. It had a very bullish, it still does have a very bullish rating. The data is then displayed, or I should say kind of divided into 4 basic components: financial, earnings, technicals, and expert, as you can see here. And then within each of those 4 components, there are 5 factors. So there's a total of 20 factors that went into creating this model. And the way this happened, came about being, is that after this whole financial meltdown in 2009, Mark and I were getting together. He could see my distress, and he could also see that I, as well as millions of other individual investors, had pulled money out of traditional brokerage firms and set up our own self-managed accounts, as I did with Vanguard. And that was fine, but the problem was that we didn't have the education or the tools to manage this money. We were resolved to do it and take control on ourselves, but we didn't have the tools or the education to really do it well. So he said, well, gee, I've spent 45 years on Wall Street creating tools for professionals. I'm going to take what I've learned and put that into a model and a workstation that is simple enough for individuals like you, Sandy, to understand and use to invest. And that's exactly what he did. So he came out of retirement. He had sold his company to a division of Reuters, but he came out of his 10-year retirement in 2009 to create this model, starting with 200 factors, which he tested and tested and tested and whittled it down to 20. Those are the 20 factors that now make up this model. And he back tested it and time tested it. And we launched the model in 2000, and I think it was 2010 when we launched it as a simple iPhone app. And since then, it's been used reliably by individuals as well as professionals. One of the professionals being John Carter, who's a partner of ours. Many of you on this webinar today are followers of John's, and he uses this meter power gauge himself. He calls it an objective awesome meter for stocks. And he likes that it combines 20 technical and fundamental factors to anticipate a stock's profit potential. So most tools are either technical or fundamental. Ours uniquely combines technical and fundamental factors. So it's really like one-stop shopping. You can get everything you need on this one power gauge rating and certainly on this one platform. But what the power gauge does is it looks at the stock's potential to out or underperform the market over the next 3 to 6 months. And so I think of it as like a GPS for stocks. It tells you where that stock is headed. So let's look at these 20 factors that make up the model. As you can see, they're broken into these 4 components. And you can see the 20 factors. The ones in red are the ones that I pay particular attention to. Other than those ones in red, I really just look at the overall rating and base my decision on that. If you are inclined to be a value investor like a Warren Buffett, you might want to look at the financials and drill down on these 5 factors before you pull the trigger on a stock. If you are an investor like Jim Cramer, where he focuses a lot on earnings, you might want to look down underneath this earnings component and look and make sure those are very strong as well. You don't have to. The model is strong enough that you know, those 20 factors can really guide you as to where a stock is headed. I like to look at price to sales ratio or free cash flow because that means that company has a lot of money, that it's not like a, Mark calls them high flying stocks without a safety net, that are some of these kind of, well, it would be like the Bitcoin stocks right now would be high flying stocks. We don't rate them because they don't have a year's data, but companies like that are high flyers in the news, kind of a flash in the pan type of stocks. Those would be very visible from looking at the financial component and seeing that that's weak. And those would be ones that I certainly would avoid. The expert component is really our secret sauce. This is really what sets us apart from just about everybody else, well, in addition to the whole model. But the short interest I find important because these are considered, the short sellers are considered the smartest people on Wall Street. They are the ones that bet on a stock going down. They actually buy it, or they actually sell it before they own it, and then they buy it back when it drops. So they're anticipating a stock is going to fall. So I don't want them shorting a stock if I'm going to be buying it. So I want that to be bullish. I mean, basically all you have to remember is you want everything to be green. Insiders know more than you or I what's going on in a company, right? I mean, they're insiders, and management gives them incentives, stock incentives to do well, perform well. So if insiders are buying, that factor will show up as bullish, and that's a good thing. If they're selling, they could be selling for a number of reasons. They could need money for a college tuition. They could be need money for a down payment on a house or whatever, but they're only going to buy for one reason, and that's because they think the stock's going to go up. So I like to look at insider activity. And other than those 3, I really just look at the overall rating. During earnings season, I like to look at earnings surprises because that can lead to a company exceeding the analyst estimates and spiking up when they report. So this is this is a stock I own, Apollo, and I just drilled down to show you the 4 components as they're displayed on the power gauge rating. On our platform, you can see I've circled this top right little navigation bar, I guess you can call it. And when you click on that, once you subscribe, you'll get this drop-down menu of the 4 components that make up the stock. Dropping down again on the expert opinion component, you can see the 5 factors that fall underneath that. And for this particular stock, you can see that they're all either bullish or very bullish. So, short interests is bullish. Insider activity is very bullish. It means insiders are buying. So for me, that's a good thing, and it tends to bode well in the stock. So that's really how I use the power gauge rating. It's important, though, to depend on a model and a proven methodology, because that will be humans time and time again. That will take the emotion out of your investing and trading. And this analyst here has said that models be human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And emotions, I know, were one of the big challenges that we all face as humans. So it's important to depend on methodology you can trust. Another a little bit more substantiation on why you can feel comfortable investing with the power gauge rating, depending on the power gauge rating. We've partnered with NASDAQ. When we created back in 2014, 3 indexes based on the power gauge rating. We took their small cap, large cap, and dividend achiever index, overlaid the power gauge rating, and filtered out anything that wasn't bullish. And these 3 indices have consistently outperformed their benchmarks since they were created in 2014. That got the attention of New York Life's Mainstay Financial Division, and we've now launched ETFs with New York Life so that money managers and their clients can now invest in a portfolio of stocks that's based on the power gauge rating. New York Life registered these 3 NASDAQ indices with the SEC, and they launched the first one in May, which was the small cap. It's now the 2nd most successful ETF launch in 2017 out of over 100 small cap ETFs. So I'm not saying this, we are not registered. I'm not saying this as a recommendation. I'm just giving this as validation that the power gauge rating is in the marketplace and is working on portfolios and in ETFs and indices every day, and it's doing very well. So you can trust the power gauge rating. Okay, so what to buy? This is always kind of out of 5,000 stocks. How do you whittle this down into the, say, for me, like the 12 or 15 that I own at any given time? It's a big universe, right? We have what we call a classic bull pattern. So these are the components of that basic rule. When I buy a stock, the power gauge rating needs to be bullish, and I want it to be in a strong industry group, which we're going to be getting into in step 3. And the money flow and relative performance need to be strong, which I'm going to show you how you find that on this chart for Signet, for instance. So let's go back to Signet, which was kind of the preview I gave you early on of a bullish stock. You can see this ribbon at the bottom. It's all green. That is a power gauge rating for the last year, solid green, which is as good as it gets. Right above it is that relative strength indicator. What this means is how strong is this stock doing relative to the S&P 500? And most investors, including myself, measure ourselves against the S&P 500. That's our benchmark. And we do that with a stock. If a stock is not outperforming, as you can see here by this heat map, it's green when it's outperforming. If it's not outperforming, why would you want to buy it is kind of my question. Because if you want average returns, you can go with the S&P 500 and get average returns. You certainly don't want to underperform the average return. You want to outperform the average return. If you want to outperform it, then you want stocks that are outperforming the S&P 500. I'm going to come back to this overbought, oversold indicator, but let's hop up here to the Chaiken money flow. This is the indicator Mark created on when he worked on Wall Street 35 years ago, and is in every stock chart and technical analysis package practically worldwide. It's often called Chaiken oscillator or CMF for Chaiken money flow. But it is universally one of the key indicators to anticipate a stock's volume. So what this does by this kind of mountainous of green and red here is it measures the institutional money coming in and out of a stock. And because institutions buy in such volume, much larger than you and I do, their transactions affect the price of a stock based because it's supply and demand. I mean, the stock price moves very differently from when I was working, say, at Elizabeth Arden, selling fragrance or marketing fragrance. I mean, the fragrance was the price, whether whether you bought it in January or June. And obviously that's not true with a stock, but the supply and demand of institutional investors has a lot to do with moving the stock price. And so that's why this indicator is so important. So I like to buy stocks that have this, strong persistence of green money flow. I bought this stock back in November of last year, so it's off this chart to the left. That's why I've got the yellow arrow kind of pointing backwards. I bought another, second position. I think it was right in here in June with this green triangle. These are buy signals. I'm going to be pointing these out on the charts as we go along. We have 6 pairs of buy signals, and these can really help you with timing. Timing being your number one challenge. So you want to be aware of these signals. They're listed up here. I can only list one at a time. So I've put in the overbought, oversold buy signals here, and you can see here that they've triggered, and one kind of recently triggered in, looks like mid-November at about 195. The stock's now at 208. So when I see these signals, this can really help me say, well, gee, maybe I should get into this stock right now. I keep 2 lists. I keep one list of the stocks that I own. I keep a second list, which I call my watch list. These are candidates to buy. And when these signals trigger, that's a good time for me to consider buying a stock from my watch list. And I'll show you how it's easy to know when those signals are triggering. But this stock is now up 56% year to date. This is what we call a classic bull. This is the pattern you want to look for. So let's look at another stock, DH Horton, or DR Horton, I should say. It's in the construction building services. That's been a very strong industry group for the year, really, and even earlier. But let's kind of break this stock down as well. You can see on the bottom, power gauge trading has been persistently strong since mid-June. The yellow connotates a few little ticks to neutral. Relative strength has been very strong, really since March, about 9 months. And you can see money flow, is strong. You can see what happens come September, October, when strong money flow couples with strong relative strength and a power gauge rating. Then you really start to see the price taking off, as we did here. I bought this stock back here in August. I could see that everything was lining up and had been bullish for a couple of months, which I like. Before I don't like it right when it's just turned. I want to wait and get a little bit time under my belt being bullish before I buy a stock. But I bought this back in August when this money flow buy signal triggered. So this was telling me there's a lot of money coming into this stock, and look what happened. I mean, yes, there you go. And look what happens when that happens. This stock just took way off. I took my profit up here in November, right after they reported earnings, and spiked up, not knowing obviously that they were going to continue to go up. The stock is now, I think it's at 50. I think it closed at the same. These charts were done yesterday, but it's still at, I think, 50 today. But that was a really nice profit. That was a 29% profit in 3 months. So that's the type of pattern you want to look out for. Look for all of these things lining up, and you can see what happens when they do. All right, so how do you find these stocks? Well, one way is Mark puts out a weekly commentary for our subscribers every Sunday called Market Insights. He's got a lot of really great information there on how he sees the market kind of weighing in on the next upcoming week. He also gives specific stock ideas, including what he calls a stock of the week. Now in September, late September, he talked about DR Horton and mentioned that as a stock of the week. I had already bought it 3 weeks earlier at, I think it was at 36. Yeah, about the same price. But nevertheless, this is a good way to get stock ideas, is to watch that column and take that seriously. I mean, after all, you're getting the benefit of a Wall Street veteran and stock guru. Another way is to take his brain power, which he's put into Chaiken Analytics, into the power gauge rating, as well as what we call this discovery engine, which is this really great feature we now have on the analytics platform. Think of this as a Pandora for stocks. You can seed this engine with a stock idea, which I've done here for DHI, and it'll tell you stocks like it. So you can see this next line, stocks like DHI. I did this yesterday, and it gives me other building companies. These have all been really great stocks throughout the year. LEN had been a stock that was on my watch list. And having gotten out of DHI, I was looking for another stock in that industry group to put my money back into. And so I bought this stock yesterday, or 2 days ago, I guess it was, on a pullback. It had pulled back about 1%. So this is and I dropped down the power gauge rating so you could see the different components, how they all rated and kind of added up to this bullish rating. But this is the type of pattern you also want to see in a bullish stock. And you can see now what's happened come, say, October, when power gauge, relative strength, money flow have all kicked into green, and you can see the stock, just racketing up, the gains and picking up steam. So a pullback is what Mark calls like a 1 or 2% drop. He's always saying, buy on a pullback. A pullback can be visible from this overbought, oversold indicator. I'm coming back to this now because this has a lot to do with timing. And when you buy a stock, you want to buy it when this overbought, oversold is dipping down, as it is here right now. You can see it's below this 30 mark. So what this indicator does is it kind of measures the zigzagging price action of a stock. It's always going to be going up. It's going to come down. It's going to go up a little bit. It's going to go sideways. It's going to come back down a little bit. That's just the way the stock moves. So when you're looking to buy or sell a stock, you want to buy it when it's dipping down, as you can see by this yellow arrow where I bought it yesterday. And if you're a seller, you want to sell it when it's peaking up above the 70 mark if you had owned it and wanted to take your profit, you would have sold it up here at like 63 or so last week. And this really helps kind of identify that time frame for you. So I keep an eye on that very carefully. So I bought this on the 11th, I think that was Monday, on a pullback at 61. I know they're reporting earnings on December 18th because it tells me that up here. And I know from earnings experience investing in stocks that earnings can really move a stock price up or down. If a stock reports earnings, and they have to report 4 times a year if they're traded on the stock exchange, if they report a better than expected earnings report, the stock can tend to spike up. And you can see what happened back in October. EPS here being green, meaning they beat analyst estimates, it spiked up. The odd thing I had to learn about, one of the odd things I had to learn about Wall Street was that the earnings are, the reaction to the earnings, the price movement is based on how well the actual earnings report is based on analyst estimate. It's not based on last year or projection. It's based on what the analyst thought it would do. That's the barometer. And when it exceeds those analyst estimates, it spikes up. When it doesn't, it drops. But you can get a pretty good sense of how this is going by looking at this chart here. You can see green, green, green next to all of these EPSs for the last, 5 or 6 quarters. And looking back on our 5-year view, I could see that this stock has exceeded analyst expectations every quarter for the past year. So that's a pretty good bet that they're going to exceed again. And the earnings component, as I pointed here on the power gauge rating, is pointing to very bullish. So I'm bullish that they're going to exceed and spike up. And that's another reason I wanted to buy it now before they reported on December 18th. So we get testimonials from our subscribers every week. Joe speaks to them, as I said, every day, as do many of our other team members. And they tell us things like Ken did, that he started investing with Chaiken on January 4th, started out with $235,000, and as of July 30th, he was up to $1.2 million. Joe, I'm sure you've talked to him since, and we'll have to get from him what his update is, where his portfolio is now at year end, now that he's coming up on a year's anniversary. It'll be interesting to see where he stands now. But Joe gets testimonials like these all the time. Okay, so step 3 under what to buy is you want to buy strong stocks and strong industry groups. Reason being, they are likely to outperform. So you want to put everything, all the chips in your favor, and the research shows that 50% of a price move is attributed to an industry group. There are 64 industry groups, and you can see them, we list them, rank them in high-low sequence based on proportion of power gauge rated stocks. So we've taken those 64. The highest is banks, then oil integrated, investment bankers, finance. I point out construction, that's what DHI and Lennar are in. So that's what, number 8 or so out of 64, which is really great. So if you wanted to go in and find other stocks in the construction building industry, you could come to this as well, this list as well, the industry group list, click on construction, and then you can see it's printing out here on the right, showing me all of the stocks. I don't have room to show them here, but I started the list showing you some of the stocks that are in this industry group, and I've highlighted MHO because it's got a buy signal on it, so it looked like a pretty good stock, as does NVR and CCS. So this is one way you can research for strong stocks in strong industry groups, but I find it easier to use a new tool we've incorporated into the platform called the screener. What the screener does is it really does the work for you. You can screen for stocks that meet your criteria. So you can see what I've done. Oops. What I've done here is plug in the stock universe of strongest industries. You could put in a stock universe of the Dow or the S&P 500 or the Russell. You can, there's different options of stock universes. I only want to invest in strong stocks in strong industry groups. So it automatically will take only the top 20 industry groups and sort them for me. So out of 5,000 stocks, it automatically took me to 856, or narrowed the field to 856. Then what I do is I plug in, I want that classic bull pattern, which means strong bullish, strong power gauge rating. Hop down here to technical, strong money flow, strong relative strength. Remember, those were 3 of the 4 components on the bullish, a classic bull pattern. And then as I said back in the power gauge section, I like to look at price to sales, short interest, and insider activity. I like those to be strong or bullish. So you just plug these things in, and literally in seconds, I've taken a universe of 5,000 stocks. I'm now down to 20. And I plug in small and mid because I like to go. I find that these, particularly the small caps, have more upside potential, because they're a little more volatile. But if small and mid caps are underperforming the market, then I'll flip this over to mid cap and large, and look for stocks with that criteria. So you can fashion this any way you want. This is how I do it. This is also in the workbook if you want to refer to it, and try it out on your own. So this is taking the screener from yesterday, which I did on small and mid cap. I can turn it immediately into a list, which I've done here. And you can see it's given me a list of, on the small and mid cap, it's given me what looks like 6 or 7 choices. And I included the stock chart here for an insurance company called Donegal. And let's break this chart down. Okay, now that your eye is getting used to looking at the charts, power gauge has been bullish since early September. Relative strength kicked in late October. And look what happened when money flow kicked in at around late October as well. The stock started to go up. It's since pulled back a little bit, and it has triggered this oversold buy signal, which means on the overbought, oversold indicator, it's in the perfect place to buy. It's dipping down under that 30 line. So, Joe, do you want to put up another poll question now, whether you all think this is a stock that you would buy now or wait? How does this look to you, given the data I've given you so far?
All right, let's see. We got plenty of requests or responses coming through right now.
Great.
And we'll give that just a few more seconds. All right, and let's take a look. All right.
74% say you'd buy it now, and 26% say you'd wait. Well, that's great. I would buy this stock now. This is now on my watch list. I'm fully invested right now, so I don't have the money to buy it now. But this is a stock. This is the pattern I look for. And it's like the perfect setup. So if you're looking for a stock idea, you might want to put this on your watch list and just watch it for a couple of days and see how it goes. But this has everything set up to be a a stock that I might buy right now. Okay, great. Time. I referenced time earlier is our single most valuable commodity today because nobody has enough time to do what we'd like to do. And Cheryl actually gave us this testimony a couple of years ago before we even had the screener. So I kind of like to use it now because she's even more wowed now. But the screener saves an enormous amount of time. I could do that research in literally 30 seconds at the most. I save that criteria into a saved screener. So when I go onto the screener, I literally hit that screener icon and pop up load screen. I load it, and 3 seconds later, I've got the stocks that fit that criteria. So it's a phenomenal way to research stocks and saves an enormous amount of time. Okay, so avoiding the pitfalls is just as important as finding those winners because it's the losers that can really tank your profits and pull your whole performance down. So we identify a classic bear as the exact opposite of the classic bull. And we adhere to what Warren Buffett adheres to is to avoid risk. One way to avoid risk is to know how to identify a stock when it's breaking down. And the power gauge, relative strength, and money flow do that for you. They help you identify a stock's demise before it tanks so that you have ample time to get out and not watch this go down. So let's look at a couple examples here. Chipotle Mexican has had a terrible time with their contamination problems, and it's the worst PR you could possibly want for a food company time and time again. But look at the power gauge. Bearish since mid-June, relative strength is bad, underperforming. Money coming out of the stock with a little bit now coming back into it. But still, and these red triangles in this case are money flow sell signals telling you to get out of this stock if you're not already. This is where you get out of it if you were a Chaiken subscriber. When power gauge went from neutral to bearish and relative strength went from positive to negative, and you had all this money started going out of this, you'd be out of this stock up here where it was at about 480 and it's now at 318. So this is the kind of pain the power gauge rating can save you from experience. I do incorporate the articles we have down here. If you on every stock chart we incorporate news stories, and you can click here to expand it and get more. We just put the top, the first two, most recent two or so. But this is really helpful because I used to have to go to Yahoo Finance to get news articles about a stock, which I'd like to do before I bought or sold. And this way, everything is on this one chart itself. Okay, Under Armour. I exercise. I buy Under Armour activewear and exercise in it, but I don't buy the stock. And here's why. Power gauge rating negative for as long as you can see. Relative strength says this is underperforming, and you've got big chunks of money coming out of this stock. Plus, in this case, we've got overbought sell signals telling you up here when it was peaking up at 7, hey, if you still own this stock, you might want to get out. Many of our subscribers use these signals also and these patterns as a setup for a put option. And Joe and his teammates give seminar sessions every week on how to trade options. We also have an options overlay that we're not going to get into today, but just know that these bearish patterns can be really great setups for put option trades. So one of the news articles from yesterday was about Jim Cramer saying he is a buyer of Under Armour. Okay, so question to you all. Maybe Joe, you'll put up another poll signal. Do you agree with Jim Kramer, would you buy this stock now, looking at this chart, or would you not buy it? We'll just give a few seconds because I want to get to the timing section next.
And let's see, I think this one's looking pretty lopsided. Let's take a look. There you go.
Whoa, awesome. Okay. To the 90% who say they would not buy it, I totally agree. And to the 10%, you really don't want to buy a stock when it has this red pattern. Even if Jim Cramer or some other financial guru on CNBC says he's buying it or she's buying it. This is the perfect argument for why you need independent research. You need your own tools that you can rely on to give you the scoop. Because if you start listening to the financial heads on the financial news channels, they could, I have utmost respect for Jim Cramer, but he uses a different methodology, and his methodology, in my opinion, would not take you in the right direction. Mark, by the way, is going to be giving a live presentation with Jim Cramer on January 31st. So you'll all get an invitation to that session where they're going to be talking about specific stocks and what each of them sees in a stock. So that should be really interesting. And I don't mean to pick on Jim Cramer, but you need your own research. So you can look at a chart like this and say, no, I'm not buying this stock, even if, you know, the experts say they're buying it. I'm not in. Here's another one you don't want to buy. I mean, just look at the red and those sell signals telling you to get out all the way down. I mean, Mark did create this to be very visual so that we wouldn't have to go into all the data. It would all be before us in red and green. And I think it's really, you know, powerful. So Norm B is another happy subscriber. Through following your system, his portfolio now stands in excess of $1 million. Before Chaiken, I would make money and then lose it. Do any of you identify with that? Consistent earnings were just not a reality for me. Do any of you identify with that? Chaiken has changed all that. I can't thank you enough for your tremendous service and excellent methodology. So let's underline methodology. That's what this 5-step process is. It's a methodology. And when you have rules you can follow, it makes it easy and it actually makes it fun. Okay, last but not least, timing. When to get in and out. So I want to spend some time on this because this is the #1 concern most of you stated. So how do you know when to buy and sell? Well, I've been pointing out the buy-sell signals. So I'm not going to get into those much more other than to say we have them, and I'm going to show you how you find them. The overbought, oversold indicator I've been pointing out as well. You know, you want to buy a stock when it's doing this nice dip. You want to sell it when you have this profit up here on the spike. How do you find those signals? Well, we have what we call an alerts view. And I've taken my watch list. I told you I have 2 lists, one of stocks I buy, one of stocks I'm watching. This is part of my 15-minute daily routine. Every morning before the open, I'll go onto my watch list and I'll go onto my stock list and I'll click on this bell right here, which is what we call the alerts view. This will show me, this will pop up the screen here that takes my list and shows me signals that have triggered. It also shows me any power gauge rating changes. So if something's gone from, say, bullish to neutral, I want to know about it because then I might start looking at possibly selling that stock. That might be the beginning of the end. But the signals would all be displayed right here. And so this is what I do every morning. Let's look at, and this was back in late October. So let's look at Huntington Ingalls on that money flow buy signal. Let's look at the chart and where that buy signal was, which is at this yellow arrow right here. This is the buy signal you saw on the previous chart, the money flow buy. So look at this chart. Did this look like a good time to buy? Well, I thought so because I bought. Based on that signal, I looked at the chart. I said, good, power gauge has been bullish for a couple of months, strong relative strength for a couple of months, very strong money flow for a couple of months, and a buy signal, and it's oversold. It was dipping down. So I thought, and it's reporting earnings. And I could see from previous earnings, 2 out of the last 3 beat earnings analyst estimates and spiked up. One disappointed, but that doesn't surprise me because that was when it was yellow, red, and red. We're now talking green, green, and green. Coming up on earnings, I thought there's a strong likelihood, and of course I went into the earnings component, and it was very bullish. This is a strong possibility the stock's going to beat when they report it, and they did. That's what they reported, they beat, and as often is the case, they spike up, and they spiked up 9%, and I sold it. So in a matter of, I think that was like 10 days, I made 9-10% on your money. I mean, that's what you can do with this system. That's what you can do with these tools. So get your eyes used to looking at this pattern. This is the perfect setup. And that can really help you. Okay, so knowing when to sell, that's kind of the recap of when to buy. Look for those signals and look for that oversold indicator to be dipping down. Knowing when to sell, this is everyone's nemesis. Well, there's 2 scenarios. Either you're taking a profit or you're sensing that the stock is breaking down. When do I take profits? This is also in the workbook. When the price hits the upper volatility band, I'll show that on the next chart. When it's overbought, that is that it's zigzagging up on that overbought, oversold indicator, or it spikes up after a strong earnings report, as I just showed you on Huntington Ingalls. But let's look at Lam Research. This is a stock I've been in and out of. I'm back in it, but I've been in and out and in and out, and I'm going to show you why. So I first bought this stock, Lam Research, back in February of this past year, and I bought it on a buy signal. Again, it popped up in my alerts view on my watch list, and everything lined up. It was oversold, dipping down, green for a long time, green for a long time, nice money coming in, and I bought it, and then it spiked way up in like 10 days. It went up like 10%. No, a little bit more than 10 days. I'd say about a month. I think that was about 4 weeks. It went up 10%. Now, these are the volatility bands that I referred to in my quote rules for when I sell. So I'm a sailor. I think of these as like staying within a channel. And when you get outside of that channel, things could get rocky and rough. You could run aground. When a stock typically goes above this channel, it's kind of going outside of its comfort zone. It's not apt to stay up there. It's apt to pull back down. So I like to take a profit when it's coming up there, when it's kind of bumping up against that upper volatility band. It's a good time to take a profit. So I took the profit. I sold the stock late March. I guess it was about 4 weeks later at 127. So I took a nice 9% profit in 4 weeks, and I thought that was great. But I put it back on my watch list because, you see, everything was still really strong. And so I had it back on my watch list. And then I noticed that it was coming up on an earnings date. And looks like that was April. So I sold it back here in March when it kind of hit this upper band here. And yeah, it was right in here where I originally had sold it. And so I was watching it to get back in before that earnings report came out. And it had a pullback here. So I actually bought it back for less than what I sold it for, which is good. And I wanted to get into it before they reported earnings because look at the green, 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 green on their earnings. They had beaten their analyst estimates, and as you can see, the stock had continued to go up. So going back to the 5-year view, I could see that they had consistently done this for 5 years. They had green earnings beats for 5 years. So it didn't take much genius to think that they were going to beat again. And of course they did. And I sold it back up here. When it went above that upper volatility band, I thought, well, I better not be greedy. I'll just take my profit on the second tranche here and sell it. So those are the rules for taking profit. Look for it when it goes above that volatility band or when it spikes up on an earnings beat, as it did here. I've since gotten back into the stock and just going to hold on to it because it's such a strong winner. But in other words, don't be afraid to take your profit, put that stock back on your watch list as I did, and then wait for another opportunity to get back in. And even if I pay more for it, I've often done that. I'll get in and out of a stock frequently if that stock still shows me that it has great potential going forward. So don't be shy about doing that. Now, when I sell, it's when I anticipate a stock's breaking down. I sell it long before it gets to that red pattern you saw in Under Armour or Chipotle, for instance. But I start watching it carefully when a power gauge turns neutral and another indicator, particularly money flow, turns negative. Then you can start sensing things are not all right with this stock. Certainly if I get a sell signal, that's a real warning signal. And if the price drops below that orange line, which is a 200-day moving average, or that lower volatility band, which I pointed out on the upside. So this is still a classic example, even though it goes back to earlier in the year. But this is really a really clear indicator of why you need these sell rules in place. So I bought this stock in early December of last year. It's off this chart, but say it's kind of to the left of this right here. And I bought it at 16. And I bought it on a momentum buy signal because, checking my alerts view, this was in my watch list and everything was green. And as you can see, it stayed green for a couple of months when I bought it. But then in February, unfortunately, this little EPS icon kind of covers it up, but you can see that it bumped up to the upper volatility band. And that was a nice spike. And at the time, power gauge was still green, relative strength was green, but look at money flow. It was just starting to tick negative. And I thought, boy, I have a nice profit on this stock. I bought it at 16. It's now at 19. It's a 17% profit. I'm just going to take my profit and be happy. And boy, was I ever happy, because 3 days later, they pre-reported the stock dropped like 10%. When they did report, it dropped another 10%. And then look what happened. I mean, literally within days, it just started crumbling. Neutral power gauge rating, negative relative strength, negative money. And look where this stock is, and sell signals, if you weren't already out. The stock is now down to $6.80. It's 58% down from when I sold it at 19. I mean, wouldn't you be devastated if you had bought this stock and were still holding on to it, saying, I'm going to wait for it to come back? That doesn't work anymore, particularly when you've got an outlook like this. So, you learn to watch these things. The red-green makes it really easy and makes it stand out. And it's a discipline that I've been able to follow pretty religiously, and it's rewarded me well. So another testimonial: in the 5 days that I've been using Chaiken, he's paid for this subscription over 10-fold. Initial results are nothing short of astounding. Please extend my thanks to the entire Chaiken team. Okay, so let's recap. 5 steps. This is the methodology I follow. Tools you can trust For us, that's the Chaikin Power Gauge rating. Tips on what to buy, that's that classic bull pattern. You want to buy strong stocks in strong industry groups. Let the screener do the heavy lifting for you. You want to avoid those classic bears that can really destroy your performance. And timing. You need to have clear-cut rules of when to buy and when to sell. So I made a promise to you in the beginning that I was going to show you how I use my secrets to beat the pros and how I find these winning stocks quickly and easily. I hope I've delivered on my promise. And that is also that we can enjoy some of these profits and celebrate in some, whatever way you want to celebrate. But think about how you want to celebrate. And this is all, thanks to the Chaiken Analytics platform, which is a proven stock selection system. We did get a very prestigious award this spring from Benzinga for the best stock idea platform in 2017. This is among 17 contestants, and it's our discovery engine and that stock screener that no doubt moved us into the #1 position, because those really are great ways to find stock ideas. So just a recap on what the subscription comes with. Of course, the 20-factor power gauge model comes with a stock discovery engine, comes with a screener, some extra bonuses, and the options. There's an options overlay that makes, gives you high probability options trades and ideas without you doing all the calculations and work. We obviously didn't have time to do that today, but the platform usually sells for $2,195 a year. On webinar special, we're going to take $400 off and bring it down to $1,795 a year. But we're also running a holiday special, which just started this week, which we're going to throw in an extra bonus. So bear with me if you will, and I'll get to that in a minute. But more free bonuses. I didn't show you this, but we have a one-day view so that when you're timing your entry or exit, you can actually see the price in real time. The earnings overlay, I showed you kind of the recap of it, where they report, but you can drill down to see what they actually did report. And the market insights, that was where Mark comes up with his stock ideas for the week, and gives you in particular one strong idea, a very well researched idea for either a bullish or a bearish stock of the week. But this is what I really think is the secret sauce to Chaikin, is that we give you great training. I mean, our success depends on your success. So we want you to be up and running and know how to use the features and benefits of the platform so you can start making these types of decisions and returns. So we offer small group tutorials. When you subscribe by tonight, for instance, you'll be have the option of going into a tutorial as early as tomorrow, where Joe or one of his colleagues will walk you through how to use the platform and use all of the features of it, how to set up your list, how to use the alerts overlay so you can see the signals that are triggering that type of thing. And if you want more one-on-one training, we will actually set you up with Joe or one of his colleagues, members, to do one-on-one training, which I think is really a huge benefit, so that you can really get one-on-one coaching of what works for you. All right, so Jim Cramer does use our model. He says Chaiken Analytics model is the best. I used it at my old hedge fund. And that was when Mark recently was giving a live presentation in New York City in late October at his seminar. So here's the holiday special. I told you we were just started promoting it this week, so you are the first to take advantage of this terrific discount. So we've taken a price almost $600 off the original price of $2,195 and marked it down to $1,599. So you want to take advantage of this. Call. The number is on the slide here. Call, email, or go online and subscribe yourself. But you do want to take advantage of this special offer because this is a really special offer. If you wait till next year to subscribe, the price on a webinar will be $1,795. So, save your $600 now off the regular price and get in onto the Chaikin as early as tomorrow, so you can start making some great trades by year end. All right, I am going to turn this back to Joe. Thank you all for attending, for your patience and attention. And I hope Joe sees you on his training tomorrow.
Awesome. Thank you so much, Sandy, and thank you all very much for joining us for this presentation. Again, just to reiterate, Sandy's offer, that is $15.99 for a full year to Chaiken Analytics. You can give us a call at 877-978-6257. Or the link right to this offer page is available in the chat box. I saw a few people mention that they just clicked on it. That's chaikenanalytics.com/Sandy. Again, this is for a full year's access to Chaiken Analytics, but starting tomorrow is our next onboard session, which is perfect for each and every one of you. This is all about helping you hit the ground running with our program, showing you how to create different lists, understand our analysis. There were a lot of great questions that came in throughout the presentation about, what do you do if the power gauge rating drops from bullish down to neutral? We're going to teach you all of that during these onboard sessions and how to react. This, of course, is accessible. Another question, can I access it on computer or an iPad? That is both correct. All of this you would access the same way you would access your email, just right within a web browser. But again, we'll show you all those details. If you have any questions, give us a call at 877-978-6257. We'll be sticking around for a little while tonight. You can also go right to the website, chaikenanalytics.com/Sandy. In the meantime, everybody have a wonderful evening. Keep an eye out for the recording tomorrow. Till then, have a great day, and we will see you on tomorrow's onboard session.